Our next question comes from Catherine in Rock Hill, and she asks, "Hey Hobart, my husband and I have planned our retirement together, but I recently heard that if he passes first, I could end up paying more in taxes. Is that true?" Catherine, I'm really glad that you asked this one. You see, too many widows and widowers, they don't see this tax issue coming, quite frankly, until it's too late. It's what we call the widow's tax trap. And here's why it happens. When one spouse passes, the survivor files as single instead of married. So it's a different tax bracket system, which means you could end up in a higher tax bracket on the same income or even lower income. Also, required minimum distributions. If you have started those with your spouse, they don't go away, which means that suddenly your taxable withdrawals could push you into a higher tax bracket. Also, consider Social Security. Those benefits, even though you are going to lose the lower of the two, they may also become more taxable once you move into that single filing status. It's really like a whirlwind of taxation that people struggle to plan for this because no one wants to think about what happens if my spouse isn't here. So a couple things to think about. There's some things that you might want to do prior to losing a spouse. First, while you're married, think about Roth conversions. So if you convert some of your IRA or your 401k funds to a Roth now, which means you pay taxes now, but under the married filing jointly bracket, your future withdrawals are going to be tax-free and there's no RMDs on those. So it helps you control that tax issue in the future. And number two, make sure you optimize your beneficiary designations. Make sure those retirement accounts are set up to transfer efficiently so you don't get hit with unnecessary or extra taxes. Three, I want you to plan your withdrawals wisely. You see, taking strategic withdrawals before losing that married tax status can reduce your future tax burden, which means that in a year where you may lose a spouse, there's actually some planning that happens before the end of the year. And it's really hard to think about this and talk about this, but it's important to consider. Catherine, I got to tell you, this is truly one of the most overlooked risks in retirement. But with smart planning, you can protect your finances and avoid unnecessary taxes like this. Let's just make sure that you're prepared. You see, too many retirees, they get hit with the widow's tax trap. Make sure that you're not one of them by planning ahead. Now, you may have some additional questions around this or other questions about retirement. Drop them in the comment section below, and please be sure to subscribe for more strategies that help keep your money safe.